Hello, today we are going to talk about Chainlink and Bitcoin. The use of Chainlink's native token is on the upswing. According to data from CoinGecko, the price of Link has increased by 2% in the last 24 hours just today. It boosts the bulls, even though it isn't a big deal in terms of massive increases. The token increased to 11.6% and 22.4%, respectively, during the weekly and bi-weekly timeframes. In the meantime, let's take a quick look at the token's performance. CoinGecko has observed a surge in price, an indication of rising investor interest. Negative confirmation delays any decline, while positive indicators and investor optimism ease the breach at $7.808 barrier. This price movement by Link occurs just after BTC's pullback. The proof of reserve mechanism that is utilized by Chainlink is open and trustworthy, which encourages investment, not to mention the proof of reserve system that the official Chainlink Twitter released. The tweet claims that consumers will be satisfied by this transparent system, particularly in light of FTX's poor handling of user funds, which led to the crypto exchange's demise. With financial backer certainty low, the cost increment can be made sense of by the new ascent in BTC and the presentation of Chainlink's PR framework. The correlation between Bitcoin and Link is 0.82 as of this writing. However, if the trust boost that prompted the recent price surge is reversed, the token's price may experience a period of correction. At the time of writing, the current market pullback was rejected at $7.80, but CryptoQuant noted a decrease in exchange reserves, indicating that investor confidence must be high. Messari demonstrates that the price trend reflected by Link's indicators is upward. The asset's Sharpe ratio of 0.68 indicates that, despite its inherent risk, it is profitable. According to CoinGecko data, Link is currently trading at $7.60, an increase of 11.4% over the previous 7 days. However, is Link able to maintain its current momentum? It seems like it can. The rising values of the RSI on a daily basis point to a long-term bullish trend in the intermediate and long terms. This momentum is confirmed by the price movement being supported by the middle Bollinger Band. However, the current CMF value of -0.13 indicates that the market outlook remains pessimistic. Price swings in the past also point to a demand block that might help a bull run last longer. The Chainlink token's price is likely to rise in the coming days or weeks. This week, bulls are attempting to recoup the token's losses, and Chainlink is expected to experience a 25% rally. Bulls can attempt to retarget the rejection at $7.808 from the current rally's support level of $6.709 if the ascending triangle reinforces the rejection. Targeting Link's price prior to the FTX crash will be easier once a breakthrough on the rejection occurs. On the daily chart, Link's total market capitalization is $3.86 billion. There was a price explosion on the stock market following the recent speech by Jerome Powell, chairman of the U.S. Federal Reserve, which also benefited Bitcoin. Consequently, the BTC price has increased to more than $17,000. Bitcoin was trading at $16,982 at the time of writing, but the happiness could not last for long. At the current level, the price is just bouncing around. Even indications of a slight downward trend are emerging in the interim. Investors should pay attention to 4 levels on the 1-hour chart. The recent gains made by Powell could be lost if the price falls below $16,727. On the other hand, a move above $17,250 would open the way for a move toward the $17,800 to $18,000 range. In point of fact, the Bitcoin market's response is also logical. Fed officials have repeatedly demanded that the restrictive monetary policy continue ever since the last meeting. It came as a surprise that Powell had recently stated that The time for moderating the pace of rate increases may come as soon as the December meeting. However, the market heard the hawkish remarks overheard. As a result, Powell also stated that the battle against inflation is not yet over. As a result, he stated, the Fed must maintain its restrictive policy for some time. Powell also got tired of being told that the Fed still has a long way to go to reduce inflation and probably needs interest rates somewhat higher than the September projections predicted. Peter Schiff, a gold bug, stated, Powell's products are no longer being purchased by investors. He was as hawkish today as ever. But gold and stocks rose while the dollar plummeted. Powell's determination to battle inflation is dependent upon a delicate landing. Another financial crisis will follow the economic collapse. Whether there will be a Christmas rally in December is likely to depend on a number of factors that will present Bitcoin with significant obstacles. The Fed meeting on December 14th and the earlier release of the new CPI data are likely to play a significant role in determining whether a green or red Christmas will occur. Bitcoin investors should also be on the lookout for additional FTX contagion effects, particularly Genesis Trading and DCG. The cryptocurrency market would feel a significant sense of relief if DCG could indeed resolve its liquidity issue alone. Also, fears of a recession are getting worse. But they could be put on hold for the time being if the Fed raises interest rates by 50 basis points and inflation continues to fall. This might be good fuel for a strong rally at the end of the year. Bitcoin may be approaching the end of its bear market due to the imminent capitulation of miners. The typical length in the past has been 14 months. We are now in the 13th month. A look beyond December, the first recession of Bitcoin. Even though Powell still referred to a very plausible, soft landing in his most recent speech, other analysts, including Peter Schiff, continue to issue warnings about the impending recession. The fact that Q4 earnings results, which are due at the end of January, are typically the strongest of the year also supports the fact that the full impact of the Fed's policy will not become apparent until 2023. As a result, earnings for the first quarter of 2023 in April 2023 may not signal the beginning of a recession. The 2 years to 10 years yield curve has the steepest inversion since the 2000s. According to a verified CryptoQuant analyst, second inversions have contributed to a correction in the S&P 500 of approximately 50% over the past 2 cycles. The statement continued, the theoretical bottom of a similar correction would be the COVID low for SPX 34% downside from here. Bitcoin would experience its first genuine recession if this occurs. If it survived, BTC would remain an investable macro asset for all time. Additionally, it indicates that BTC prices may remain low for longer than the typical 3-month cycle bottom. Thank you for watching. For more financial news and info, don't forget to hit the like and subscribe buttons.